Do you think you'll have an underpayment penalty next time you file taxes? And if so, how much do you think that penalty will be? Now, I was just thinking about this because I was working on our tax planning software and I was updating the figures to calculate an underpayment penalty. And I thought, this is fairly complex. I mean, it's not super complex, but it's also not very simple. And the reason is that there are so many factors that go into calculating an underpayment penalty. It's not as simple as just looking at the amount of taxes that were underpaid times a percentage equals the number. Instead, you have to factor in all these different figures that first determine whether or not someone's even going to get the penalty, and then second, what that number is. So I thought, well, what if I take the formula out of our tax planning software and I made a standalone Excel spreadsheet? And that's what I did here. And this spreadsheet is live. I'll put a link in the description so you can access it. You can use it for your own. And I'll show you in this video how to calculate an underpayment penalty approximately, because even though I spent a great deal of time, probably too much time making this spreadsheet, to really perfect it would have taken countless hours, because again, this is a fairly complex calculation. And I'll explain why it's somewhat complex as I go through it. Now you'll start by putting in your total tax liability. What do you think you're going to owe in total for income taxes that year? And you can look at your last year tax return to get an indicator, or talk with the tax specialist to help project what your tax bill is going to be. But put that number here. So I have some arbitrary sample numbers here. So you'll put that number here. And now keep in mind, we're only filling out the white cells. If it's shaded in with this beige or gray or yellow, you're going to leave that be, because that's a formula. It's already a calculation. Then we put in last year tax liability. Now, why does that matter? Because you may qualify for a safe harbor exemption from an underpayment penalty, or relative to the amount you paid last tax year. Because basically, without going too far on a tangent, if you paid 100% of last year's tax bill in withholding or estimated payments, you're going to be exempt, even if you have a huge remaining balance of taxes that you owe for this year. So you have to look back at how much you made the prior year to determine whether or not you may qualify for an exemption. And so we need to put that number in here just because that may exclude you from being subject to the penalty. So again, looking at your last year's tax return will give you an idea of what to put there. Then you need to put in your AGI, adjusted gross income. Why do you need to put in all your income? Because depending on how much money you make also determines how much withholding you needed. And this goes back to the last question, number 3. So if you make over $150,000 in adjusted gross income, then you need to have 110% of last year's tax liability withheld. If you make under 150, you just need 100% of last year's tax liability withheld. Now remember that you're supposed to make payments as you go, and this is reconciled quarterly with your quarterly payments. And I'll explain what that means when we get to estimated payments and why all these penalty numbers are different. And this, of course, goes into why it's somewhat complex. But keep in mind, this spreadsheet's here just to simplify it. So if you can get these figures, which between looking at a paycheck stub and last year's tax return, you should pretty easily be able to access these figures. So you'll put in your AGI, adjusted gross income, and then total credits and payments. And namely, this is withholding on your paycheck if you're a W-2 employee, or this is also if you had a refund last year and applied it toward this year's tax liability. Any application of a past year refund, that'll go there. So W-2 withholding or refund applied to taxes will go here. Now, automatically, it's going to estimate how much of your quarterly payment or how much quarterly payments should have been. It shows you Q1 through Q4. Based on everything you entered up here, it's calculated automatically. Now, of course, I could change this, and let's say that you had the proper withholding on your W-2 job, right? Well, this would show 0, meaning that there's no quarterly payments due because you withheld the proper amount. You withheld $20,000 in your paychecks relative to your tax liability. But we're just going to pretend like we're underpaying. Okay? So we only had our W-2 job only withheld $10,000, or even if we're self-employed, we only paid $10,000 so far. And this is showing what the remaining quarterly payments should have been. Now, how much of those did you actually pay? Did you actually pay $2,500 each quarter, or whatever this is calculated here for you in the beige? If you did, enter it here. Enter in that number. And you're going to see all these figures down here change based on what you input up here. And the reason is that ultimately we're getting to this number here, right? The yellow one, total underpayment penalty. But you'll notice that in Q1, 2, 3, 4, all these numbers, these penalty amounts, they're different. They add up to the total underpayment penalty, but they're all different. And the reason is that, as I was saying earlier, since you pay as you go, since when you earn the money, the taxes are due on it and it's reconciled quarterly, if you make a bunch of money in the first quarter and you don't pay it, well, you're paying the entire year after you made that money, the following 3 quarters, you're paying interest to the IRS. So underpaying in Q1 is even worse than underpaying in Q4 because you're accumulating the 8% IRS tax rate. Now the IRS, they changed the rate of what the underpayment penalty percentage is, but if you look on their website, right now it's 8%. That's what you're paying to underpay. I mean, do you really want to pay 8%? I mean, it's nonsense. I mean, if anything, overpay a little bit, but don't get hit with an 8% penalty, right? So when you enter this in here, it's going to calculate your penalty based on prorating the underpayment amount for each quarter, because that's how the IRS calculates it. Now, this calculator is far from perfect, but it's pretty good to give you a general idea of whether or not you're subject to a penalty, and if so, how much it's going to be. And the best thing you can do is just overpay slightly, not too much, because you don't want to give the IRS a loan for free, but also you don't want to get nailed with an 8% penalty. So that's what we're trying to avoid. Now, again, the link to this calculator is in the description. Please feel welcome to use it. If you have any questions, please leave a comment. Thank you for watching.